Hola, buenos días. Bienvenidos una vez más a 2084. Estamos aquí Santiago Varela y yo, Antón González, con Douglas Borthwick y vamos a platicar sobre su su interés en la compañía de INX y cómo es que llegó a estar aquí. Y vamos a hacerlo de nuevo una vez más, este episodio en inglés. So, Douglas, I was just telling the audience how you are involved right now in the INX securities, but we'll go a little bit on your background and how you have been all over the place in the financial industry, from Lehman Brothers, Morgan Stanley, and a lot of FX operations. So if you would just like to talk a little bit about your finance career and how it has led you to the INX Limited Corporation.
Sure, I'd love to. Thank you very much, Anton. Thank you, Santiago. And I'll try not to speak too fast. My background, I'm from Scotland. I came to America. I went to Carnegie Mellon undergraduate business school at Yale. My first ever job was at Lehman Brothers doing economics research, but that wasn't exciting enough for me. I went to business school and came out and started trading foreign exchange. I spent 10 years at Morgan Stanley running foreign exchange derivative trading desks in New York and London, working out of Hong Kong and Tokyo as well. I came back and ran a proprietary trading business at Merrill Lynch. I ran the Latin America business for Standard Chartered. And then went to a company called TPI Cap, the largest interdealer broker, where I created a currency ECN, so an electronic way to trade currencies. And it was a rather large one. And I left there about 3 years ago because I heard about someone doing something in Israel that I thought was probably the most interesting business I'd ever heard of. Now, I'd always had an interest in cryptocurrency, but I'll be honest, at first I shrugged it off. I said it's a passing fad. I remember standing on the floor of the New York Stock Exchange being interviewed, and I said, there's no way China's going to allow this. It's going to collapse. Now, Bitcoin was at $1,000 then. I'd say about a year and a half later, I was rethinking things, and I thought that Ripple, XRP was the next big thing. Again, I was wrong. I don't think it is. And then I really started to get into and understand Ethereum and Bitcoin. And, my view has always been, I spent a lot of time devaluing currencies around the world. And I did that in Asia in 1998, 1999. In Latin America, obviously, I was, working on those, but also in Iceland. But at some point, I realized that everyone is always buying the dollar when they don't like another country, but the dollar is devaluing itself every day and no one really understands why. And I'll give an example. When we all are children, our grandparents and our parents tell us you should buy real estate because it always goes up. Now, does it go up? I think the reality is the dollar goes down or the peso goes down, and so it looks like it's going up in price. An example would be a townhouse in Manhattan in 1900 maybe cost $2,000. Today it's $25 million. Now, did it go up in price or did the dollar collapse in price? Another example would be my first job when I came onto Wall Street as an analyst out of undergraduate. I got paid $35,000 and I thought that was a lot of money. Today, when I try to hire someone 1 year out of school, maybe it cost me $150,000. Now, is that person 5 times smarter than I was? No. It means the dollar's gone down about 5 times over the course of, let's say, the last 25, 30 years. Now, if the dollar's down more than 5 times, think of where the peso is compared to 30 years ago. And so it's not really about real estate going up in price. It's more about your own home currencies going down in price. And I see Bitcoin as the way to guard yourself against devaluation, against the printing of currency in your own home country. And the lovely thing about Bitcoin is it's something that everyone can get involved in because of the fractional ownership. You don't have to buy 1 Bitcoin. You could put $100 in a week, $50 in a week, $10 in a week. It doesn't matter. But you could build a portfolio that essentially, to me, feels like it's something that keeps your wealth from getting inflated away. And by inflated away, I mean, when someone's very wealthy, they buy a master's painting, a Picasso, Renoir. And they buy it because they know that in the next 10 years, it'll be up 20, 30%. Or they buy a penthouse apartment in Manhattan or in Miami. Good place to store money, it'll go up in price. But not everyone has the money to buy a penthouse apartment or a master's painting, but they've got enough money to buy Bitcoin. And when I think of the cost of education, university, a lot of people have to pay for university. It gets very expensive. I think Yale today said it's going to be $80,000 next year. Now in Bitcoin terms, it's collapsing in price, the cost of education, but in dollar terms, it's going up. And so Bitcoin to me is one of these incredible inventions that anyone around the world, whether you're rich or poor, can invest in and hopefully save themselves somewhat from losing money every day, because governments every day print money. And so when governments want to spend money on something, they print it out of thin air. Now, if I have $1 million in the bank and the government decides to print $1 million more of currency, well, my $1 million isn't worth $1 million anymore. Maybe it's worth 500,000. But my Bitcoin will still be worth what it was yesterday and the day before and the day before, theoretically. Now, that doesn't happen every day. You see moves up and down. For townhouses in Manhattan in 1970, it looked like it was a disaster. The prices were collapsing. No one wanted to buy one. There was violence on the streets of New York. But sure enough, if you stayed through the violence and you struck it out, you're sitting on a gold mine. And I think that cryptocurrencies like that. Now, for a long time, cryptocurrencies, a lot of people have stayed away from them because they've said, you know what? Governments haven't given any regulation. The big guys aren't getting behind it. Just 5 years ago, the people that said Bitcoin's going to $20,000, people saw them as being conspiracy theorists. They were the kids sitting in their mother's basement with 10 followers on Twitter saying Bitcoin's going to 20,000, and everyone said these people don't know what they're talking about. Today, it's the richest man in the world, Elon Musk, and he's saying, no, Bitcoin's actually something important. And it's JP Morgan that says it's going to $150,000. It's not just a guy in his basement. And now you've got large institutions all around the world embracing it. And 2 days ago, President Biden came out and said, you know what? We think this is going to be very important. In fact, it's going to be the key for innovation in the United States, so we better get around it. Now,
Douglas, now that you mentioned this, precisely the executive order on President Biden, I was very curious on asking you, now that you're mentioning how, for example, JP Morgan now thinks that Bitcoin's going to get to 150K. Actually, like a couple months ago, maybe a year ago, Jamie Dimon said that Bitcoin was a scam. So it's really interesting how you're talking about this, the fraud of fiat. But I wanted to ask you this question. I don't know, it's a tricky question, but do you think that a digital dollar, CBDC, that we know it might be coming very soon, is gonna be like an enemy to cryptocurrencies, or are they gonna interact perfectly? And just how is it going? Do you imagine that?
Well, USD digital dollars, right? Central bank digital currencies. Everyone talks about them. Now, there are some countries in the world where privacy is not a big deal. China's coming out with a digital yuan, but they don't have a constitution that says you have a right to privacy. Now, in the United States, if you were to use a federal central bank digital currency to spend everywhere you went, people would probably say, I don't want the government seeing what I'm spending my money on. Now look at the two of you here, Anton and Santiago. Do you want the Mexican government know what you spend all your pesos on?
No,
there's some things you'd rather use cash for. And I think that what will happen is you'll see central bank digital currencies used on the higher level. So between the Fed and commercial banks, and between commercial banks in the United States and commercial banks outside the United States, the central bank in the US dealing with, let's say, the central bank in Mexico, we send digital pesos, digital dollars back and forth. But for individuals like ourselves, we'll probably use stable coins like USDC, maybe even Tether. And so folks are going to come up with stable coins that are more private stable coins, but they're under regulation. In the United States, it'd be maybe under NYDFS, the New York Department of Financial Services, where there'd be some sort of audited structure that would say for every digital coin that's out there, there's a real dollar standing behind it. And that would be audited by a proper auditor. And I think that that's where we're going to end up going. And I talk to a lot of people around the world that are creating digital yen, digital dollars, digital euros, even digital pesos. And I think that all of us want to have a digital currency. None of us want to have a bill in our pocket, especially after COVID. Do you want to touch a dirty bill? Probably not. So, and everyone's used to using Apple Pay or Google Pay on their phones to buy things. We're used to that digital world. And when we're playing computer games, we're not using dollars there. Well, we onboard dollars a lot if you've got a teenage child. But what we do there is we're spending Roblox, or we're spending Robux, we're spending in-game money. So we're used to spending digital currency. I think that what we're looking for is an efficiency to trade digital currency and move digital currency very, very quickly. One of the incredible things with digital currency today is you can move it from one wallet to the other in a matter of seconds. In the old days, if I wanted to send you pesos, I'd have to go to, I'd go to my bank and I'd say, I want to send $5,000 of pesos to Anton or to Santiago. And maybe you get it in a week. And then the exchange rate that it's taken, maybe they take 5%, the bank would take 5%. Well, that's a disaster. It doesn't have to work like that. If I can send Bitcoin to you right now, if I send it from my phone today, you'll receive it immediately. And it doesn't matter if I'm sending $1 million, $5, $2, you're going to get it immediately. And there's no 5% charge to it. And it's immediate, and it's suddenly you have it, and then you can decide what to do with it. This is the incredible movement we're seeing in digital currencies, the ability to spend and send immediately. And so it cuts out a lot of middlemen though, right? You heard me say, I go to the bank. Bank won't be there anymore. You could do it now person to person. But what the US government, and I think other governments want to make sure, is that when someone does send money, that they know who it is, right? Because if I have $1 million and I send it to you through the bank system, the banks know, and there's a record of it. The bank can say, Douglas has sent $1 million to Anton. And they'll make sure that I've cleared through AML and KYC, money laundering and know your customer type things, and that Anton has too before it's given to him. The issue with crypto today is I could have a stable coin in a wallet that the government doesn't know I have. I could send it to somebody around the world and nobody knows, no regulator knows about it.
Excuse me, Douglas, and speaking exactly about this point, for example, the biggest remittances corridor that exists in the world is US to Mexico. They send around, I think, 30 billion a year.
Yeah.
And a huge problem with Western Union and all of these companies that are the middlemen, which you talk about, that send money from one place to another, need to do a background check so that they comply with the money laundering regulations. How do you think this is going to work out?
Well, I think that what's going to happen when we start using digital currencies is the US government's going to say, you know what, if you want to have a wallet, you need to register it. Now today, now think of it as Swiss bank accounts. Maybe 20 years ago, the US realized that a lot of wealth was held in Swiss bank accounts in Switzerland, and the US government had no idea about it. So people weren't paying taxes on the wealth they had there, and this was a problem. And so the US government, I think, is very likely, in Treasury and FinCEN in the US, is very likely to say, you know what, you can have an electronic wallet, you can hold Bitcoin, but you have to register your wallet at a broker dealer or a cryptocurrency business that's regulated. And you have to go through KYC and AML and have that AML and KYC attached to that wallet. So when a transaction is made from one wallet to the other, the government can see that it happened, or at least a regulated institution can see that it happened. Now today, a lot of people may turn around and say, oh, I don't want to do that. I like the secrecy of my wallet. Well, that's fine. You just won't be able to trade in America. You won't be able to do the transactions in America. You'll have to go offshore. But what it will do is it allows places like JP Morgan or BlackRock or Fidelity, the very large institutions in the US, to now get involved in Bitcoin. Because if they know who's on the other side, if they know who their counterparty is and they know that that person's been through KYC and AML, then you know that they're very willing to go out there and trade it. And the issue with Bitcoin in the United States today is, you don't know if the other side, if it's an anonymous wallet, if it's North Korea, or if it's, a bad actor, you've got no clue. And so what we're going to see is DeFi platforms like Uniswap, for example. People trading there anonymous to anonymous all day long. But what they'll end up doing is they'll have an anonymous pool for outside the United States and a pool that's gone through KYC and AML for inside the United States. And so you can be sure that the person you're dealing with on the other side has gone through some sort of background checks and is who they say they are. And that's
Because
really
you're touching on a key issue right now. It's this idea of decentralization that is one of the things that gives Bitcoin so much power, and we've seen it over the years that it's been alive. But my question here is, how do you see then what is gonna happen with all these financial institutions that you're talking about, with the DeFi revolution that is barely starting and all this decentralization?
every bank wants to deal in DeFi. Every single bank in the United States, they see the yields. They want to get a piece of it, but they also want to open it up to their investors. But they can't open it up to their investors if they don't know who's on the other side. Now, I'll give you an example of DeFi that works, let's say in Bank of America. Bank of America, I put $1 million in a bank account, they give me 0.25%. But they lend that million out to someone that I don't know, but they do, at 15% for a credit card. And Bank of America sits and gets the 15% minus the the 25 basis points, and they take that difference. And they say, you know what, we're taking this difference for bricks and mortar for us to do all the KYC, the AML for running the business. DeFi is something where you get all of that. You'd get that 15% yourself, but there's no regulation whatsoever. Now, if you want Bank of America, JP Morgan, Goldman Sachs to trade in the DeFi world, they'll be able to trade in it, but it's going to have this huge umbrella over it. And this umbrella is going to be created by companies like my own that set up KYC and AML and whitelist wallets. And once a wallet's been whitelisted, it's gone through a KYC AML, it's had that attached to it. We'll then say, you know what, now you can trade on this DeFi platform with all the other people that have come from all of the other regulated institutions, and they've whitelisted their wallets. So it's a CeFi DeFi. Now, outside the United States, you could trade away if you want. But if the US finds out you did that, you might be in trouble. Just like the US, when they find out you have a Swiss bank account that you didn't report, you can get in trouble. And people will be pushed to different centers all around the world, because every country is going to come up with this as soon as the US does. So it takes away a little bit of that idea of Bitcoin's about anonymity. Well, it is to an extent, but really it's moving away from that. You're still going to be anonymous. It's just your wallet that shows, not your name. But there was a time when your cell phone was anonymous, your cell phone number. And now I'm pretty sure you give me your cell phone number, I'll put it on Google and I'll find out who you were. And soon wallets will be like that too. After a while, people will kind of figure out, well, that's so-and-so and that's so, and they'll end up getting marked. Chainalysis already does this, and Elliptic does this, where if a wallet was ever used for a bad transaction, they can mark it and they can say, you know what, you don't want to deal with this wallet. This is a bad one. And soon, Chainalysis and Elliptic will take all of the wallets that have been used or holding Bitcoin that were stolen from Mt. Gox or wherever, and they'll make sure that they can't deal in the US system. And people's names will be added to this, bad actors' names, so that soon you have this walled garden in the United States, and there'll be a walled garden in Mexico, a walled garden elsewhere. But you'll be able to trade with each other as long as you're inside the walled garden, as long as your wallet has gone through a KYC AML and has been attached to someone's name. So you still have the benefits of being able to trade with folks all around the world, but you're just doing it in a regulated manner where the government can see what you're doing. It's limiting for maybe 5% of the users of Bitcoin, maybe 5% of the folks that are in crypto, the bad actors, the ones that want to stay under the radar, the ex-Silk Road guys. But you know what, you lose them, but you gain Fidelity, you gain Goldman Sachs, you gain Bank of America, JP Morgan, Morgan Stanley. And when these big names come in, Bitcoin's not trading at $40,000 anymore. It'll be trading at $200,000. Because when these guys buy, they don't buy one Bitcoin, they'll be buying thousands. And as we all know, Bitcoin's limited. And so I've read everywhere that if every single fund added 2% to their portfolio of Bitcoin's going to be a heck of a lot higher.
Okay, so now I want to ask you
But it's not just funds. Think about corporations, MicroStrategy. Sailors Group, they're out there buying Bitcoin, and people look at it and say, wow, there's a lot of volatility, but darn, these guys can make money. And there's a lot of corporations that want to buy Bitcoin, and they're a little bit worried. You know, buying it, is it fair to buy it? Should you buy it? And there was always a worry that sat over the United States that said, you know what, Biden could end up and come out and saying we're going to outlaw Bitcoin. What that executive order has said is we're not going to outlaw it. In fact, we think it's the center of innovation going forward. So we're going to embrace it. We just want to add some sort of regulation to it. And to me, that was the best news I've ever heard.
Yeah, the news we got on Wednesday was great news. So now I want to ask you, which are the crypto assets? I don't want to say cryptocurrencies, but crypto assets that you are most interested in. Which ones would you really consider investing serious amounts? And I also wanted to ask you precisely why Bitcoin and Ether now, since you went from Ripple, Bitcoin, you've been all around. So I'm a little bit curious about that. And that can also take us to the talk about what do you think about the arguments or the debate between proof of work, proof of stake, now proof of concept, proof of history. There's many stuff going on, and you're a computer scientist. So I think I would think it would be really interesting to get your insight of that part of crypto assets.
These are all good questions. First of all, this is not financial advice. I'm not licensed in any way to give anyone any kind of financial advice. I don't look at meme coins. I don't look at protocol coins. I really only look at two. I look at Bitcoin, and I think Bitcoin's the sun. And I look at Ethereum. Now, Bitcoin I like because to me it is liquid gold. It's gold that I can move around quickly. Think about this. You get $10 million of gold, $10 million of Bitcoin, and you're sitting in Ukraine. How are you going to get $10 million of gold out on a wheelbarrow? No, but you can send it like this from one wallet to the other. That's magical, absolutely magical. Now, Ethereum I think of as being gas, like petrol, oil. You know, every blockchain is to me a train track. And all these train tracks, you add trains. Think of trains as being different projects. You know, there's one project that's on the Ethereum blockchain, maybe another that's on the Avalanche blockchain, another one's on Polymesh blockchain. But wherever the train tracks have the most trains, that's the one that needs to spend the most gas. Because they need, for a train to move, it needs, you know, power. And so if you've got something like Ethereum, and there's a lot of things going on the Ethereum blockchain, well, the odds are there's going to be a demand for that gas in the future. And so I like Ethereum because there's a lot of trains on that track. There's not a lot of trains on a lot of other tracks. And you'll hear about, you know, a project coming out on this blockchain or that blockchain. It's almost a new blockchain coming out every week. But if there's no trains running on those tracks, well, then to me, the currency is kind of worthless. So I like to look at where are the trains on the tracks. Now, a lot of people will say Ethereum is very expensive. Gas fees on Ethereum is expensive. You know, when people were buying NFTs like crazy, gas fees were going up to something like $40 for a transaction on Ethereum. Today, they're around $12. Now, it reminds me of something of Malthus. Malthus had a theory back in, I think it was the 1800s, a long time ago. And people were saying, you know what, at some point, the world's population is growing so fast that we're going to run out of food. And so food prices are going to go through the roof. What they did, or we have to reduce the population. What people found out, though, was that new technology meant that we could produce food in a more efficient way. And that's ETH 2.0. ETH 2.0 is a way of finding a way to use Ethereum and the blockchain there to make sure that prices can go lower and things can get done faster. And I believe in that. I thoroughly believe in the Ethereum blockchain. When I talk to banks around the US and companies all around the world, their first choice of blockchain is the Ethereum blockchain. Their second choice is, I mean, there's like 8,000 second choices, but everyone's first choice is the Ethereum blockchain. Now, I did the first ever IPO on the blockchain for a registered security in the United States. I raised $85 million, and my token is the only one that's a registered security. So that means the full prospectus offering, just like Amazon or Nike. Now, I can't trade in the New York Stock Exchange because they don't have blockchain capability. I can't trade on NASDAQ, they don't have blockchain capability. So I bought a broker dealer, an ATS, an alternative trading system, and it trades there. And we've now got a lot of companies coming to us that say, look, we also want to be trading on your platform, on the Ethereum blockchain. And I think over the next year, 2 years, there'll be hundreds of companies that want to either raise money or delist from current stock exchanges and instead list on a platform like mine. And we've already had press releases going out for companies that said they're going to do this. Why? Well, I'm open 24 hours a day, 7 days a week, 365 days a year. If you trade on the OTC or NASDAQ or the New York Stock Exchange in the US, you're open from 9 a.m. to 4 p.m. or 9:30 to 4, whatever the hours are. And these hours were set up, hundreds of years ago when people would take a horse and cart in from New Jersey. And then they'd read the morning paper, do some trading, read the evening paper, and take the horse and cart home. But currency markets are 24 hours a day. Crypto markets are 24 hours a day. I think we all understand that the news cycle's 24 hours a day. So why on earth aren't equities? So my token, the INX token, is the only registered security in the world that trades 24 hours a day, 7 days a week, 365 days a year. And we believe that everything will go that way. In fact, in a speech about a year and a half ago, Jay Clayton, who is the SEC commissioner in Philadelphia, said that he sees all assets moving to the blockchain in 3 to 5 years. And that was about a year and a half ago. So in the next 18 months to, 3 years from now, you're going to see companies migrating from current exchanges onto the blockchain. Why? Well, let's say I want to pay a dividend. I pay it directly into someone's electronic wallet. I don't need to go through a commercial bank or anything. I could send USDC or Ethereum. That's pretty efficient. And the trading trades 5 times more than it would if it was on the New York Stock Exchange, because it's open 24 hours a day, 7 days a week, 365 days a year. Let's say you're in India. Do you want to wake up in the middle of the night to trade Nike? Probably not. Or do you want to go out, wake up in the middle of the night to trade Amazon? And then you look at the price of Amazon and it's very expensive. But with digital securities, you can buy fractional amounts of a security. You don't have to buy just one. You could buy, there's 18 decimal places to the INX token that trades right now, 18 decimal places. So, anywhere you are in the world, you don't have to buy just one share. You could buy 1/8 of a share, 1/19 of a share, 1/20 of a share. You can get fractional ownership and you can do it in your time zone. I think that sounds pretty good to a lot of people, because most people that participate in financial markets today are rich people or, wealthy. They're middle class, upper middle class. But the other folks that are living hand to mouth, minimum wage, on the bottom end of the wage spectrum, they can't afford one share. But if you can give them a fractional ownership of shares, they can build up a portfolio over time, and they can share in the prosperity that equities see or that digital securities have. And it's called the democratization of finance. Finance shouldn't be just for rich people. It should be for absolutely everyone. And I think that Bitcoin is one of these things that really teaches that lesson. One of the best things about cryptocurrency that I have, and I've got 2 teenage sons, and they would always wake up and they'd think, I'm just going to spend daddy's money every day. And now before they spend money, they think, what, instead of spending money on these earbuds or this or that, maybe I should take that money and instead buy some Bitcoin, instead buy some Ethereum. And they've built up portfolios. And that to me is great. If you think about something, I can buy an asset that's going to depreciate, that essentially is a durable good that's going to disappear, or I could put something and actually save, but actually learn about the process while I'm saving. To me, that's golden.
And right now, Douglas, speaking about investing in this type of tokens, how can people buy the INX token, or how is it going to be accessible to all? Like you're saying, that not only middle class and upper class, how can people get there?
Well, anyone can. The INX token is available to retail all the way through institutions. And we've got institutional owners, retail owners. We've actually got 8,900 odd token holders. That's a lot of token holders. I think that's more than all the other security tokens in the US combined. And the way to find it is you just go to securities.inx.co, securities.inx.co, and then you can read about the token, learn about it, and you can buy it. So it's really open to the world based upon geo availability. But it's a US security. I think if in Mexico you can buy Nike, then you can buy the INX token. And the other cool thing is you custody it yourself. I'm sure you know what a MetaMask wallet is. If you've ever bought an NFT, you get a MetaMask wallet, you download it, you hold it on your phone essentially in a wallet. And the INX token is like that. It's the first security that you can hold yourself, that you trade using MetaMask wallet to MetaMask wallet that meet on our platform, our trading platform, and then you walk away with it and it's in your wallet.
Is it possible to store them in hardware wallets?
Sure, you can send it to any wallet that can hold an ERC token. But when you actually do the trading of it, you have to use a MetaMask wallet, but then you can transfer it wherever you want. But the other cool thing is it's a special type of token. It's an ERC 1404 token. Now, most people trade ERC20s, but an ERC 1404 is really specific. And we developed this with a company called TokenSoft and with the SEC when we came out with our issuance. The SEC doesn't want retail to lose something in a boating accident. You've heard the stories. I had a friend and he had a wallet and he had Bitcoin on the wallet and he lost the wallet and he's lost all of his Bitcoin. You can't do that with a US registered security. But the ERC 1404, if someone loses their wallet, they can call up us, the issuer. We can revoke the tokens from the lost wallet and reissue it to a new wallet. That's pretty phenomenal. Just think about all the Bitcoin you've ever had in different wallets and you lost it. If you could actually revoke it and reissue it, that'd be pretty nice. But the other thing is wallet hacking. It's a big deal. Everyone's always trying to send you something on Telegram saying, hey, why don't you click here and let me, okay, it's all scammers. Scammers can go into your wallet and they could take your USDC, they could take your BNB coin, they could take whatever, but the INX token, before it moves from one wallet to another, looks up to the blockchain and says, is the wallet I'm moving to whitelisted? And if it's not, it refuses to move. It's, again, pretty mind-blowing because now you've got a little bit more security, much more security than you would on any other product. And I think that now it's not foolproof. Someone could actually steal your whole wallet with your seed phrase, and then they could do something. But that's like, I've got gold, it's hard to sell, but if that gold's in a house and I steal the house, then I've got the gold. But again, once that gold came back up or once that token came back into the market, we'd be able to see exactly where it was, who bought it, who sold it. Going on etherscan.io, you can watch every trade that happens in the INX token. Could you imagine if you could see Nike trading in real time and see every single wallet as it buys and sells, and then you can click inside the wallet and see if they're a big buyer or a big seller when they've done all their buys and all their sells? You can't do that with Nike today. You've got to wait a couple of weeks to maybe for a 14K or whatever it is to come out. But with the INX token, you see in lifetime. One of the big things that happen in security markets in the US is a hedge fund wants to creep up in a company and buy 5% of it. And they can be in the market buying, and nobody knows. It's very, very quiet until they actually do a self-report and they say, oh, by the way, we own 5% of your company. With a digital security, that'd be really hard to do because you can actually see in live time on Etherscan as someone's accumulating a position. And so the transparency that comes through digital securities is astounding. The ability to pay dividends is astounding. The fact that they trade 365 days a year, 24 hours a day, 7 days a week is astounding. And all of this is in a secure way. And it's all in a walled garden where there's KYC, there's AML, whitelisting of wallets. And all of this stuff is stuff that existed maybe in different pieces, but what we did as a company is we pulled it all together and worked with the regulators to make sure that it worked for them.
Right now, Douglas, one of the biggest backlashes cryptocurrencies have received is a trading speed. How does INX manage this so that there's no crash?
Well, the trading speed, look, equities trade T+2, 2-day settlement. Now, we do every single trade on the blockchain. If you buy a token from one person to the other, it's MetaMask wallet to MetaMask wallet, shows on the blockchain immediately. Now, for the Ethereum blockchain to register it, maybe it takes 7 minutes, 8 minutes. But 8 minutes is a lot faster than 2 days. Now, is it instantaneous? No, but there's not many things that are instantaneous in this world. There is if I send Bitcoin from me to you, That's instantaneous. I'd say maybe it takes 3 minutes. But again, that's got to go around the Bitcoin blockchain to make sure that all the validators say that it's a good transaction. And the Ethereum blockchain is a little bit slower right now because there's so many transactions happening. Now, am I willing to wait 20 minutes to have the token show up on my MetaMask wallet so I can then just walk away and know that my deal's done? Absolutely. I was in a time once when Lehman Brothers went under, and I had foreign exchange exposure that was closing in 2 days' time where they had to deliver me hundreds of millions of dollars. And I didn't know if I was going to get it. So 20 minutes to me, that's not bad. That's a lot of heart attacks I don't have to have. And so I think that people are going to get okay with 20 minutes.
Yeah, and the Bitcoin network, for example, is going to keep augmenting, I imagine, like how we have the Lightning network that is making transactions more faster. But now that you're touching this point about the validators of transactions and so on, I wanted to ask you, what do you think about the mining processes, specifically behind Bitcoin and Ether, both of them? What are your perspectives on that?
Well, I'm not a mining expert, but I'll tell you my thoughts. And I'm not a computer scientist. I'm just a simple economist. But the miners that I know are very, very concerned about getting cheap energy. And they see cheap energy as being coming from really renewables. Setting yourself up next to a hydroelectric dam, setting yourself up in West Texas and taking gas out of that otherwise would be waste products. So certainly they may use a lot of energy, but they're doing it in a very efficient way. Because the more efficient you are, well, the more profit you make. Now, a lot of times people have looked at wasted energy. And if you go to Texas, you'll see all of these gas flumes that are on fire. And that's gas just going into the atmosphere, but it's getting burned off before it goes there. When a Bitcoin miner comes in and shuts that off and actually uses the gas to create Bitcoin, you're now taking wasted energy and creating real energy. That's pretty amazing. And I think that Bitcoin miners are finding a lot of different ways to use energy that have never been thought of before. And why? Because they have a financial incentive. Now, the old days of saying, well, Bitcoin miners are burning coal and that's how they're creating energy, I'd say that that's actually not true anymore. I think that studies, Elon Musk came out and said, look, until I can see that Bitcoin is being sustained, and I think it was something like 60% of all of Bitcoin mining was being done in a sustainable way. Now, when you look at how electricity is generated in the US, I think it's 60-something% is actually being generated from coal-fired plants or from oil plants. In other words, they're using energy that it's not nice for the environment. So when you top up your electric car at home, the odds are that electricity is actually being generated not from renewable sources, but probably from a coal-fired plant. But the thing is, it's not in your back door, right? It's over there a state away or 20 miles away from you. So you think you're burning clean energy. Electricity is not clean energy. I think we all have to understand that. Yes, it means that there's less exhaust fumes when you're walking on the street, but that electricity comes from somewhere, and where it comes from is probably a coal-fired plant. And people don't understand this, but Bitcoin is actually being sustainably created. And a lot of the guys that I talk to, that's their goal. Their goal is to find something that's sustainable, but to turn it into something real. And taking wasted energy or energy that isn't being used and making it in a way that can be used and created into, I guess, energy in the form of digital currency is to be pretty magical. Now, Samson Mao, friend of mine, he's got Blockstream, and Blockstream are down there in El Salvador. And they're tapping volcanoes for energy. And they've got satellites up in the sky that are their validators. I mean, some of this stuff, it's sci-fi, it's absolutely incredible. If you can take all the volcanoes in your country that before just spewing out all this energy that's getting wasted, and now you plant Bitcoin miners there, you're creating a tremendous amount of money for your country. Now, hopefully Mexico will follow El Salvador's example and start, bringing Bitcoin in, because it really is one of the most wonderful things to see when I look down in El Salvador, what they're doing here. They're turning around a country that really was very dependent on the dollar, and now they're creating their own dependency using something like Bitcoin and taking energy that was being wasted and creating it. Now, when you talk about Ethereum was something you could mine too for a while, and you still can. but not forever, right? If Ethereum's about to kind of switch things over a little bit so it can look a little bit cleaner. I think that that's going to be interesting, but I don't really know. I mean, I can't really, I think there's a lot of level two, L2s, like there's Avalanche, for example, there's an L2 to Ethereum. And what they sort of do there is they print the tokens. Tokens are already printed. Now, if you need some, come buy them. And so we don't have to worry about, energy consumption. Now, that's all well and good, but I think that the energy, the way that Bitcoin is being mined right now is probably one of the most incredible things, because it's giving all these financial incentives for companies to be out there and doing it. And I don't buy into the Bitcoin mining is dirty. I think there's some bad actors that are probably producing it. I'm pretty sure that if a Bitcoin is mined in North Korea, they're probably not using renewable resources to do it. But at the same time, that Bitcoin is probably not getting into the US supply because of the use of whitelisted wallets in the United States. So, I think that there's lots of discussions about it. I'm agnostic. I don't have a view. What I have is I have an exchange, and I support both sides. Now, Bitcoin miners is probably going to be one of the biggest stories, I think, for 2022. Blockstream has raised a lot of money through Stoker in Germany, and Arnab, who's the owner of Stoker, is a very good friend. And we're going to start raising money for Bitcoin miners as well, because Bitcoin mining may be one of the most profitable businesses I've ever come across. Some of these companies, they've secured land, they've secured the energy. Now they're buying the Bitcoin miners that were sent away from China because China banned it. And once they get them up and running, even if they were to give half of the Bitcoin that they mine to investors, it comes out to something like 3 to 5% per month at current prices. That's around 87% per year return. That's absolutely phenomenal. So I think that, Bitcoin miners are about to become a very big story for a lot of people. And they'll differentiate themselves by saying, well, look, we take renewable energy, we take green energy. And so investors will be able to decide who they're investing in, and that'll help drive the decision. But ESG can only go so far. ESG has been a buzzword for a long time. And look, now Europe's in a spot where they're taking all their gas from Russia and they're getting rid of their nuclear power plants. Well, maybe they should have kept the nuclear power plants and forget about the gas from Russia. The US is now in a spot whereby we've been saying, we don't want any more gas or oil development in the US. Let's shut down the Keystone pipeline. And now we're sitting there saying, oh, wait a minute, but we've been taking oil in from Russia and from Iran or Venezuela. Is that smart? And the answer is no, it wasn't smart. So I think there's going to be a big rethink on energy and energy use in the United States and elsewhere.
Wow, it was incredible to listen to all of that. But I want to go back to the very interesting volcano bonds part. It's actually a question that I had in mind before this conversation. I really wanted to know your thoughts on volcano bonds, and you already told us a little bit about that. So I think it'd be better if I ask you, where do you think the digital sovereign debt market is going? How is the debt market gonna evolutionize with crypto, and how is banking also going to evolve? Because I imagine that banks are also going to have crypto. There's going to be banking on crypto, or how do you see this, that you're closer into this financial system?
Well, banks will always poo-poo crypto until they find a way to make money on it. And they're not going to find a way to make money on it until they can keep the bad actors out and make sure that it's only good actors that are in it. So first you get the regulation. The first step that banks will do is they'll say, we've got custody. So just like you're at Chase Bank right now and you keep your dollars there, they'll say, now we're opening up a Bitcoin wallet if you want to keep your Bitcoin here. We'll open up an Ethereum wallet, a USDC wallet, and you can keep all of your different crypto at the bank. So custody will be the first one, and they'll charge in custody. The next thing they'll do is say, well, if you want to send that to someone, you can do that too through us, but we'll make sure that, the people you're sending to, it's all clean and good, and we'll do that. Say, okay, that's fine. The next thing they'll get into is investment products for high net worth individuals and for retail. The US has been trying for a Bitcoin ETF for a long time, and it's always been poo-pooed. Why? Because I think that the SEC's made it plain that the underlying Bitcoin isn't regulated, and they need to find that to be regulated. But once Bitcoin's regulated in the US, ETFs will be flying around everywhere. And then people will be able to get invested. The other thing that banks want is they want to have a yield curve. If a high net worth client says, I want a product that gives me the returns or the appreciation of Bitcoin or the price movement, all they have right now is the front contract at the IMM or the CME of the Bitcoin future. And that only gives you really 3 months out. And they need to have something that goes out, let's say, a year before they offer commercial paper. And so you're going to see derivatives start to get involved, and banks will start trading non-deliverable forwards in Bitcoin and then deliverable Bitcoin and start building yield curves. And we're working on things like that through our interdealer broker arm with our company. And then once there's different products, investment products, the banks are going to be talking about it quite a lot, because now they've got ways that they can make money off of people. In terms of the international banking system, I think you're going to find that, most people right now trade what's called SDRs. That's sort of how reserve managers look at their reserves. And reserve managers all around the world have STR as special depository receipt balances that are sort of a different weighting of dollars and yen and euros, Aussie dollar, maybe a bit of Canadian dollar. I forget what the makeup is. But the net of it is, you hold on your balance sheet a certain percentage of different types of assets, different currencies in your reserves. And I think that what's going to happen in the future is that people will start to add a little bit of Bitcoin, a little bit of Ethereum, a little bit of different currencies. Generally, the reserves that you carry as a central bank are almost a mirror of who you do your trade with. You know what? You do 50% of your trade with the US, probably 60% of your reserves are going to be in US dollars. You do 50% of your trade with China, probably 50-60% of your reserves are going to be in the Chinese yuan. And so what people, as trade becomes more and more done using cryptocurrency, you're going to find people buying it. The US government already has crypto on its balance sheet because it goes around taking crypto off of criminals and keeping it themselves. And so the US already has billions of dollars of crypto on their balance sheet. And they probably want to cash that out at some point, or they'll just keep it. But I think that, first you have to get, if you think about crypto, first it was retail, then it was institutions, then it becomes banks, then it becomes central banks and nations. Now what El Salvador has done is it said, we're jumping directly from retail to a nation. And I think that people are looking at it as being, this is an experiment. Just like they looked at MicroStrategy and Sailor as being an experiment on the corporate side. So they'll watch and they'll wait and they'll see, well, how does El Salvador's economy move? I think a lot of people turn around when Bitcoin goes down and says, look, these guys have stabbed them in the foot. Bitcoin's a disaster. What a bunch of idiots. What a bunch of fools. But if Bitcoin's trading at $100,000 in a year's time, everyone's going to turn and say, you know what, these guys were geniuses. So I think folks are looking at it all saying, let's just sit back and watch. But I'll tell you, you've got a country that's now producing its own currency, Bitcoin, using its own natural resources. That's pretty phenomenal. Now, Mexico's got a lot of resources, oil, plenty of oil in Mexico. And if Mexico can find a way to start mining Bitcoin as well, using the natural resources they have, that could be quite something for Mexico. And every country is going to be looking around and saying, what do we have that we produce that we can create something with? Because I think that the price of all of this is going to start appreciating. And governments are fully aware that when they keep dollars in their reserve, those dollars become worthless over time. And you keep Bitcoin in your reserves, well, at least you get a chance against inflation. And inflation's coming the hard way. Inflation in the US was 8% print about a week ago. And that's before we've seen the gas price rise on the back of what's going on with Russia and Ukraine. It could be we could see 15% inflation in the US. And yet the bank still is only paying you 0.25% interest. If I own Bitcoin today, maybe I can get 6.5% interest at a lot of different places if I just deposit my Bitcoin there. If I own USDC, I could go to Gemini today, deposit it there and get 12%. 12%. Why on earth would I want to keep money in my bank? So banks have to figure out ways that they can attract crypto investors. And they're going to have to up their interest rates, and they're going to have to start doing a lot of different things differently.
So if you were to bet on a single cryptocurrency that's going to emerge as a reserve currency for central banks around the world,
Bitcoin is going to be the first one.
Okay.
Bitcoin, absolutely. There is nothing that compares to Bitcoin. Bitcoin is a reserve currency, and again, I see Ethereum as being gas. So when you look at the reserves and how central banks are set up, all of them hold gold. Oh, now you hold gold and Bitcoin. And then you look at the US, and the US has what's called the SPR, the Strategic Petroleum Reserve. And that's where they hold a lot of gas. So when gas prices go up, or when oil prices go up, they can release millions of barrels a day, pushing the price lower. And maybe you'll see central banks start setting up, a gas reserve using Ethereum, and they'll start building reserves there. So when Ethereum prices start rising, then they can release it into the market, and you can have it, come off a little bit, because people are all trying to use Ethereum to pay gas fees to do transactions on the Ethereum network. And I think that that's what's going to happen. Now, the early adopters like us, we can sit there and try to buy as much Bitcoin and as much Ethereum as possible. But again, you've got to not look at the short end of what did it do overnight? What did it do yesterday? What did it do tomorrow? That's like looking at townhouse prices in Manhattan in the 70s. You get panicky, oh no, it's up, down 20%, up 50%. You got to look on this long-term time horizon. Don't invest too much where you're up at night sweating, but invest enough whereby you feel like you've got your foot in the door. And obviously once someone invests, they start learning about it. They start reading about it. They start watching shows like this. And as people learn, then they start to really go down what we call the rabbit hole, obviously. And they start really getting into it, and they start telling their friends about it. And adoption hasn't really started. In the United States, I read somewhere that 65% of the US believes in cryptocurrency and thinks it's the future. There's no politician in the US that's going to vote against that. And that voting bloc goes across race lines. It's black, white, Asian. It goes across wealth lines. It's rich people, poor people, everyone in between. And so when you've got a voting bloc like that, you have to go with it. So the question is, why didn't Biden go with the Elizabeth Warren approach, which is ban it all? Well, it's because he wants to get voted back in. And when you look at every single race that's going on across the United States, whether it's mayoral races, Congress races, Senate races, cryptocurrency is one of the central factors of the race, because they all know that that's where the voters are and that's what the voters want.
Okay, very interesting. So with this said, Douglas, do you imagine the United States sometime eventually issuing some kind of volcano bond or Bitcoin bond like we saw in El Salvador? Do you see that as a viable option for the financial system?
Well, we don't have any volcanoes in the US, at least that are active. So I don't see volcano bonds. I think
Well,
that
sort of that.
I think that what we'll end up seeing is every country's got natural resources. I'm from Scotland. In Scotland, we've got wind and we've got waves. And if we could turn that wind and waves into Bitcoin, that's pretty good for Scotland. We've also got oil in the North Sea. In America, there's also natural resources in every different state. Some states are windy. Some states have a lot of water. Some states have tide that they can use. Some states have gas. Some states have oil. And every state on a state level is going to figure out, you know what? We can produce Bitcoin or we can produce cryptocurrency using this energy. And you're going to see it happening all across the United States. Already, if you go to upstate New York, where there's lots of water, there's already people that are booking, like building Bitcoin mines next to it, next to the water. And it's happening all across the US on a state level. And each state seems to think, you know what, if we can create money here, then we can reduce taxes. Think about that. You could go to a state like New York and pay no tax. And so they attract all these people to New York and they pay no tax. Why? Well, because they're making so much money from Bitcoin mining. So, if you have just regular energy that's natural energy and you can turn that into a currency, I think every state and every city across America is going to try and say, we should really get into this. Now, Panama's done it. El Salvador's done it as a nation. But remember, El Salvador is not as big as a lot of US states. But you're already finding US states where you've got every mayor that turns around and says, you know what, I want to get paid in Bitcoin.
That's what I wanted to ask you to finish up. What do you think exactly about these initiatives? For example, the Miami coin and other cities and states are doing similar coins like these city coins.
I think they're gimmicks. I think right now they're gimmicks. It's about that. That's them saying, hey, we're hip. We know what we're talking about. And this is how we want things to be done. But I don't really see a lasting benefit to these tokens and these coins. I think that it's almost frequent flyer miles. So they're interesting, but it's not really something that's going to be a big hit in the future. And I don't think it really helps the Miami residents. So there's a lot of gimmicks out there. It's almost like NFTs. You know, NFTs are exciting right now, a little bit gimmicky to a great extent. But when you have a new technology, you find people going in all different directions. Because sometimes the direction you go in just gets you a lot of attention, and it's the attention that people are looking for. But then regulation comes in and it kicks out a lot of these attention getters, and then you're left with something a little bit more meaty. And I can name an example. You know, ICOs in 2017, 2018 raised $25 billion, but they were all illegal. People got wiped out. And then regulation came in when actually my company went to the SEC and said, we want to do this. And now you can do a security token offering rather than an ICO. And now it's all regulated. We think it's about to blow up. It's about to become huge. So you always go through that time where things are really bad and then it starts getting really good. And maybe NFTs are there right now. You know, when you see $40 million trade between two anonymous wallets for a JPEG, you sort of think, well, that smells a little bit like money laundering. I think in the old days, you would pack that money into a jet and fly it across the border. Now you can just buy a JPEG. And it's between two anonymous people. And you know, the US government doesn't like that at all. And so I think we'll probably see NFTs start to move into this umbrella where they've got to be regulated too. So a lot of things are running out fast, saying innovation, innovation, innovation. Regulators are going to come in and say, nope, let's just clip that in the bud. That's not innovation, that's illegal. So what I try to do with our company is we try to take the slow way. We're the tortoise rather than the hare. We'll work with the regulator in the passenger seat rather than in the rear view mirror. And I think that's going to end up working out for us.
And finally, Douglas, just to finish up, what do you recommend as a starting point for someone that's not in the crypto world right now and would like to start?
I'd say the easiest way to learn about crypto is to buy $50 worth of crypto on an exchange, because now you've got a position and now you want to learn about it. Once you've done that, then, you know, YouTube is probably the only way that my kids learn anything. And you know, in my day, you had an encyclopedia that was delivered once a year. You'd get a whole series of encyclopedias. In fact, I still have in my library like a 1969 Encyclopedia Britannica. And that's where we got our information from. And then we moved to the internet and people would Google stuff there. And now YouTube seems to be the only way you learn something. And there are so many videos out there for people to watch and get opinions on. And there's a lot of opinions. And there's a lot of paid opinions too. But I think that once you watch enough and you listen to shows like this and you listen to enough, I guess, experts, you begin to get your own idea, your own views, your own thoughts. You know, everyone always talks about do your own research. And that's key. You can't ever rely upon someone else. Someone may tell you this meme coin is really good and I saw it tweeted, I think I should buy it. I'd say that buying something because someone else says it's good is probably not the right investment decision. Instead, you buy something because you believe in it. And if you don't believe in it, then don't buy it. So you have to do your own research, but it's definitely something you have to learn about. You know, in 1992, I graduated from Carnegie Mellon and the internet was just starting up. And I thought, this isn't going to be a big deal. I'm going to go to Wall Street. And I had a friend that lived in Turkey that was at school with me. And he said, you know, I'm going to go to Turkey. I'm going to open up a business that's going to sell ISPs, you know, www.blah-blah-blah.tr. And it was extremely successful. He took it public on the London Stock Exchange. He goes around now in a 100-foot sailboat. He took something that was just coming out, the hockey stick, we call it, just about to explode, and he capitalized on it. And this is where we are now with cryptocurrencies. It's something that's just getting regulated now. And it's regulation that ends up making something available for everyone, where everyone feels more comfortable with it. And that's when the real fun begins.
Well, Douglas,
it was
Go ahead,
it was great to hear you and to learn from you. It was really, really interesting. I think I have like 30 more questions I could still ask you. So hopefully we can talk again soon. But it was great. It's really an honor to have you here in 2084. And thank you very much for your time. We appreciate it.
Thank you very much. Muchas gracias.
Gracias a ti.
Ciao.
Pues bueno, hasta luego.
Thank you.
Good. Thank you, Douglas. Take care.
All right, guys. Thank you. Ciao.